What's going on, guys? I hope you're doing well. This afternoon, just wanted to cover Bitcoin and just wanted to really break down exactly what I'm seeing here in the charts. All right, I'm going to get into it. All right, so I'm using USDT, BTC, USDT as opposed to the perpetual contracts. This time around, it's pretty much the same thing, frankly, but it's just denominated in USDT profit and loss terms as opposed to actual perpetual contracts. Um, Not much of a difference there, frankly. They kind of run under the same data structures. It's just more so something that I feel is just, especially when you're in a bear market, like if you're going to be trading, from my perspective, you want to really take profit in stable coins as opposed to uh, Bitcoin or Ethereum or whatever you're trading exactly. So I just wanted to have this little marker up here just to kind of like align with my values at this time. Anyway, all right, so I'm going to go to the market cipher indicator on the daily chart. So yeah, we are having continuation of that daily sell signal that I showed you guys yesterday. From the daily close to now, price on Bitcoin has fallen 1.2%, not too much, but as you can see, the 9 EMA is currently lost as support. That's not that good. From an intraday perspective, now there was a cross of the 21 EMA, and I believe this is a 50 EMA. Yeah, and yeah, so essentially, this 2150 EMA cross is important for the bulls to really land, to really stick the landing. Um, so my personal case is price will eventually come to the downside a little bit more, probably 1.5 to 1.75% to really test this. Now, if it fails, if we see a daily candle close below the 50 EMA, I would consider this cross that we're seeing essentially why the EMAs are bullish at this time and changing colors. If this cross fails, then we are expected to doom, okay? We are expected to fall very, very high. Now, fall very, very low. Now, in this particular chart, this is actually a different chart than what I've been sharing for a while now. We did have this like huge falling wedge pattern that Bitcoin did break out of, but as far as support lines on the daily is concerned, if the 50 EMA does not hold, I would expect some reaction at 22.342. Also, potential reaction at 20.7. So it's not completely lost. So if the price does break through roughly the 50 EMA zone, which is around basically 23,418 at this time. If price isn't able to bounce from there on the daily perspective, that yes, we could expect significantly lower prices from there. All right, so money flow is still kind of waning to the downside, as is the VWAP. There is an opportunity for the money flow to create a higher low instance, so we can have that like a momentum shift. Still not there at this time. We are experiencing the beginning stages of a fresh downtrend. The TSI is also saying the same thing because we have the fast moving indicator flipping yellow, but the slow moving average is still technically bullish because it's just like raising up. So until I see a confirmed lower low from this particular area here, probably I would say on the 8.6 range, I wouldn't consider this anything serious. It's just more so a consolidation. But anything lower than a print of 8.6, yeah, I'd get very concerned, and most likely we would probably try to create a macro higher low perspective as opposed to the low from here at negative 55. All right, I'm going to move on to the other indicators on the daily chart. Okay, so we have the MACD indicator. We did have this nice pump. We had a couple days of pumpage. It was probably like from 1, 2, 3, 4, 5, 6. It's pretty much almost a week of pretty upside only. But now we're getting 1, 2, 3, 4. We're in 4 days of consolidation, pretty much. Now, Given that this is really, really close to a sell signal, I gotta respect it as such. I gotta respect it. Now, it hasn't confirmed, and the intraday levels will give you a better picture of the MACD, because keep in mind the MACD is a lagging indicator, so this is really where the laggards kind of put their positions in there. But usually it's more so on a weekly, monthly, 3-day basis. I like to keep it on an intraday to like a swing trading perspective, so I don't really go that far into the weeds. I really do think that stuff's like super slow at the end of the day. So, for my opinion, unless you are holding for, months or years, even, like, there's no point in looking at the monthly or the weekly. All right. Um, yeah, given my assessment on crypto, I have like at least a 10-year time frame on all these assets, so that's why I already uh, inherently am bullish. Okay, anyway. So as long as price is below 24,082.76, we can expect lower prices. So 24,000 cannot sustain any support, or actually, if it continues acting as resistance, then yes, we can continue seeing downside from the Bitcoin perspective. And of course, when Bitcoin falls, everything else falls, but just more epically. All right, so as you can see, we had not one but two bearish divergences, and we had a sell signal yesterday. Like I said before, this bearish divergence, there was pretty much like about 4 or 5 days of downside, and then, after those days, we had, a couple days of consolidation. Then we pumped to the upside pretty vigorously and created a higher high from the previous top of this divergence to create a higher high. Now, in this time, we're actually having a sell signal once again, and yeah, the fast moving average is pretty clear cut below the slow moving average. That's not a good sign of positive price action from a daily perspective. RSI is the slow mover as well. Let me take this line off here. I'll do that another time. But yes, this actually is not looking good from a RSI perspective. The fast moving average did cross below the slow moving average. Now, I want to see if and when the RSI crosses and then back tests as resistance and continues, that's when I'd be looking for like really advantageous shorting opportunities from a swing trader's perspective, not financial advice. At this time, it's still above the 50 mark, so inherently it just means that it's easier for the bulls to push price up as opposed to the bears push the price down. So at this time, I'm refraining from any significant short positions from my perspective. I'm more so kind of looking at how this is going to play out. I would prefer to see the RSI back test the slow moving average as resistance before I even consider thinking like, oh, we're in complete bear control zones. Preferably, honestly, when the fast moving average crosses and candle close daily below the 50, I'm more interested in a swing trade short from the daily perspective at this time. I mean, I'm keeping my eye on it. Definitely, the Bears do have the advantage. They were able to break the slow moving average, and even the slow moving average, as you can see now, has a little hump on it. So, it to me, um, you know, is this the day we actually break, significant patterns? But I'll get more into pattern trading in a little bit. But I just kind of want to go through these exponential moving averages and all these different um, indicators before I kind of do pattern trading perspectives. Anyway, all right, so we are in the red zone here. Now, the slow moving average on the TMA is still above it. It's still slanting to the upside ever so slightly. Okay, as you can see, the slant is not sideways, it is still up. Okay, oh, I did that terribly, but whatever. You get the point here. So until I see a dead cat bounce and then a cross below and then a confirmation, I feel way better about my shorting positions on a macro level as opposed to this right now. Just because, like I said in I believe the last video, like yes, we did create a bearish divergence and we are still consolidating above the 50 line. But we never really tagged this oversold zone for me to feel comfortable in opening a short, frankly. So until I see kind of like an overbought scenario, I'm leaning more bullish as opposed to bearish. from a personal level until I see something different, frankly. All right, so I'm gonna go to the 4 hour. Okay, and I'm going to start with the MACD. All right, so the 4 hour MACD is showing interesting signs here because we are having this momentum wave to the downside, and it's done its damage today in terms of overall percentage. This is the Heikin-Ashi candles version of the market cipher indicator here, which paints a more true picture, in my opinion, about what we're actually seeing, because the money flow was actually green on the regular candles, but on the Heikin-Ashi candles, it's actually depicted a cross down, and it actually showed and validated these moves to the downside, which I believe when I had spoken with you all, yeah, like price was roughly around right here. This candle, or yeah, around the yeah, August 14th here. Let me just, yeah, roughly around here is when I was talking to you guys about the price action. Yeah, it sucks because when I post this video, there's actually like an hour or two delay in terms of like me creating it versus like it actually uploading. So so that's why I kind of like look more towards like intraday swings as opposed to like scalps with you all, just because YouTube doesn't allow me to actually instantaneously post it. So it's just really risky. But anyway, at the end of the day, on the 4 hour, we did have this 921 EMA cross, and that's not good, frankly. The ball is in the bear's court at this time, unless some like freakishly rich individual purchases Bitcoin and pushes the price above this 100 EMA. I'm sorry, 50 EMA. Then I'm gonna expect prices to continue going to the downside and might revisit some longing opportunities here. From the current price action, we could potentially see even like a 3% dump on Bitcoin, which would mean like a 5% dump on Ethereum, 7% dump on Solana. As the lower you go, the more intense the dumpage. In terms of market cap, the lower you go in terms of market cap, the heavier the dumpage. So that's what I was kind of referring to. Alrighty. Let me check out TSI. So TSI recently just crossed down below the zero line. That's actually very bearish. Thick, fresh red indicator on the slow moving average on the TSI. So from a bear's perspective, if you did initiate a short roughly around here, you are still in the positive in regards to your position. Now, if you were a bull and you opened up a long, I am so sorry. I apologize for you. All right, so let me see here. Let me go to the 4 hour. Okay, so 4 hours kind of intriguing. 4 hour, I usually don't like to have Heikin-Ashi candle momentums, because yeah, if you actually change, funny enough, if you change the candle pattern, it actually changes the reading on the indicators. And actually, personally, I like the indicators to read the Japanese candle variations because like it still monitors the wonkiness and stuff like that. If you want more smoothed out indicators, you're going to want to use the Heikin-Ashi because Heikin-Ashi is based more so on momentum, and Japanese candles are more so based on volume, if that makes any sense. So I like to look at volume when I'm looking at my indicators. I like to look at momentum when I'm looking at Heikin-Ashi candles. But anyway, so from the MACD perspective, we are actually seeing waning pressure in terms of sell pressure for now, just because of the slope. It's ever so slight, but we are still seeing a gradual upward trend maintain respect. Now, the actual indicators here, the MACD indicators, they're actually crossing below the zero line. So from my perspective, the bears are still in control at this time. Even though momentum is waning, they could still do damage. It could still push the price down. But in terms of overall momentum, I would prefer to much more see like a trend as opposed to uh, build as opposed to going off of this information at this time. It's not a bad thing that there's still consolidation to be had, But yeah, from the MACD perspective, there's still more so time. There's no buy signal, and especially like 4-hour buy signals and sell signals on the MACD aren't necessarily like the best telltale side in regards to overall trend. But frankly, you got to respect the overall trend at this time until you see some new histograms go from yellow to red. Um, yeah, uh, I would still, heed with caution in regards to opening up fresh shorts. I'll say that. But yeah, at the same time, and I think I said this yesterday, but I'm more so looking for buying opportunities, more so to dollar cost average into and really take a more concerted approach to initiate swing trades, swing long trades. At this time, I'm not opening up any shorts or I'm not opening up any longs at this time. I'm more so looking for a spot long position, but we're just not there yet. It's too risky to open up something at this time. There's nothing showing this momentum slowing down in my perspective. Yeah, TSI on the 4-hour also is agreeing with me here. It says as long as price is below 24,086, we can expect prices to continue to the downside. Also on the 4-hour, the slow moving average and the fast moving average on the TSI, if you will, is crossing below the zero line, and it's also printing a lower low, which we haven't had in a long time. So the trend is literally flipping before our eyes. Now we could see a pump to the upside. Once this could cross, right? This could cross to the upside and then create a lower high, and that would be a great shorting opportunity, frankly. At this time, it's been a clean cut, unless you saw this back test on the 4-hour. So like for example, if you saw this back test here and actually the next candle close printed, and you could have gotten into a short position right there and done pretty decent for yourself. But were you awake at that time when it happened? You know what I mean? Were you paying attention to the TSI? Like these are things you have to take in consideration, of course. And obviously you don't want to be looking at the charts all day. I mean, it's best to actually look for these things beforehand, or at least kind of prepare for like these crosses or anything like that. But until you see it in real time, it's really hard, especially like when you're in front of the chart, price is like preparing to like pivot or whatever, and it's that momentary decision that will either make or break you. It's like, oh, okay, shit, am I going the right way and all that kind of stuff. So it's really like, nerve-wracking if you don't really know what to look for in regards to your indicators. Because like the data is pretty concrete. It's more so like the reader of the data. It's the reader of the data that usually is the one that is causing the issue. So, again, I had a long day, so I'm having a little bit of a beer right now. So sorry about that. Anyway. Okay, we're going to move on from the TSI and go to the TMA. Did I actually do? I actually did not. Okay, whoops. I'm going to go to the MACDX. The MACDX on the 4-hour actually crossed below the zero line, which is predominantly bearish until you see like a cross or like a buy signal or maybe like a divergence, something like this. Like I wouldn't open up any longs at this time, so we still have a long ways to go. We still probably have like a day or two to go to really see that actual momentum shift to the upside. So I wouldn't say like, open up some fresh shorts at this time, but I do think that the bottom is not in and it's more so wait and see. Um, Now I'll get into pattern trading because actually I didn't realize I should have prepared, but I have this pattern I wanted to show you all. Um, but yeah, I'll just draw it up when it's there, and I'll show you why it's a little bit sketchy to open up some fresh shorts at this time. But anyway, yes, we got that back test over here as resistance right around here. I believe yesterday it was, yeah, we kind of had these 1, 2, 3 showing, these little hills showing. These two are pretty new. Yeah, so we got that back test not once but twice in creating lower highs and also printing new lower lows here. And we're venturing off into the bearish control zone ever so slightly. Now, as far as locating shorting positions, this is actually interesting because unless um, these trends are broken, and now we do have like a more intraday trend on the 4 hour. So yes, you could kind of go off of these like highs for a trend, but because you have a higher low and then you have a higher low, then you have a higher low. I like to do stuff like this where I'll get the latest two higher lows and then I'll create a new trend line pretty much there. So as long as this trend line is respected as resistance, then I can open up shorts nearby it. Now, if it doesn't happen, let it pass, just let it pass. Don't worry about it. Wait for, a 34 cross to the upside on the 4 hour or whatever. That is more so something that I would be more attracted to at this time. But if you want to do more so scalp swings and stuff like that on like the 15-minute or like the 30-minute or whatever, you can do stuff like that and use the 4 hour indicators to get entries or good entries like on the 15-minute or like the 30-minute. But anyway, not financial advice, by the way. That's just like something that I like to work with sometimes. Okay, so I'm going to go to the TMA. So the TMA actually crossed below the slow moving average. So that's not good. Not only did it cross the slow moving average, but it's now creating this trend of lower lows. 1, 2, 3, 4, 5, maybe even 6. So this trend is pretty strong. This trend's pretty developed. Um, yeah, I mean, it could come back up maybe to the 50 line or maybe even to, oh, I hate it when yeah, I've been getting this lately. I'm like, what the hell? Apparently someone's trying to gain access to my account or whatever. But anyway, denied. All right. Yeah, so anyway, where was I? Oh yeah, so if I were to see this kind of create a fresh new lower low instance, kind of like where the previous bearish divergence was and this initial lower high, kind of create a lower high below the slow moving average, then yeah, I definitely would expect uh the indicator to test this zone here before it even considers going to the upside of the overbought zone. But yeah, as far as like swings and stuff like that, I'm not really looking for any long swings anytime soon until I see a reset on the 4 hour indicators, because we're kind of in the thick of a bear move, honestly, and maybe you could open up a short maybe and like get 3%, a 4% move on Bitcoin, or maybe even a little bit more on altcoins or whatever the hell. But it's kind of played out. I like to place my entries at or near the pivot zones, and that pivot zone was more so the 13th of August and the 14th of August, as opposed to today. Yeah, but you know, at this time, I am looking for a more so of a longing opportunity before a shorting opportunity, and I'll show you why at this time. Just want to clean up my indicators before I really move on to the next time frame. All right, so let me go to the 1 hour market cipher indicator. So the market cipher indicator it's been trash. I'll be honest with you. It's been, scam dump after scam dump, because we had this potential trigger wave right here, but and I was zooming in actually on like the 1 minute and the 3 minute time frames, the 5 minute time frames. I was seeing some X's last night and today. So the market cipher area indicator was actually showing some whale manipulation and push, and essentially whales want the price to go down. BTW. But yeah, as far as what the 1 hour is showing today, we did see a cross here, but money flow is still thick in the red, and there's not really much of a higher low at this point. We're still kind of like in the thick of it, so it's hard for me to say that this is going to become a higher low. I'd rather see a confirmed higher low as opposed to an anticipated higher low. At this time, this is the way also where the VWAP is at. Look at this VWAP. excuse me, it looks really likely that this could, uh, cross again and initiate a new leg to the downside. So, as far as I'm concerned, I'm leaning bearish still until this ultimately creates a higher low situation. Something like this right here. Yeah, I'm still bearish until I see something like that for a swing. I'll be honest with y'all. Okay. Um, all right, so let me go with the TSI indicator. So the TSI indicator has been really choppy. It kind of like showing a little bit as to why, but we have not fully reset. We reset here, but then we reached the top side a few times. Now, I would like to see this come down and kind of create some form of divergence before I really consider a longing opportunity or like a good one. Because the ones that have been presented here have been away from the oversold zone. These crosses and stuff like that have been really choppy. We've just been in a really gross position for any long opportunities. The reason being is because, yeah, while these buy signals were going on, price was, or the exponential moving averages were going red and also flipping from support to resistance. So now we're in a fresh bear trend at this time. Um, Continued crosses to the downside would just be just gruesome, frankly. But yeah, as long as price is above, I would say 23,670, the bulls do still have a shot to create that higher, um, that lower high, which actually this lower high was printed at 24,059. So we have consistent higher low, I'm sorry, we have had consistent lower highs and lower lows since probably the 15th of August, like low, lower low, lower low, high, lower high, lower high. So we have a pretty fresh new trend kind of taking into consideration, not including this mega high right here. Um, yeah, so at this time, oh, and would you look at that, the 1 hour's printing another sell signal. Who would have thunk it? All right, so from the traditional candle patterns, I want to show the exponential moving averages here. So, all right, so yeah, until I see like a 9 crossing the 21, I can't be bullish. Every cross has been denied or it's gone up above the 9 EMA for like 1 hour or two, and then it just gets like sold off immediately. So at this time, it's the ball is in the Bears' court. The Bears are still maintaining the trend, and frankly, they've done significant damage, especially on the 1 hour. I mean, the 1 hour. This is the 100 EMA. You long when price is above the 100 EMA. Now they flipped it. This is now resistance. It's been confirmed resistance. Probably 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. There's been a dozen plus candles that have confirmed. Even this one. Look at this Darth Maul candle right here. This one. Like back tested the 100 EMA as resistance confirmed. So I mean at this time it's obviously there's chop and stuff like that, but frankly until I see a cross above like the 21, like a 9 and 21 EMA cross, which is like this line and this line, I can't look for fresh longs and feel good about it. Okay, so um, okay. Oh yeah, I was gonna do something. I was gonna go onto the 4 hour and I was gonna do some line charting for you all. Um, yeah, let me do that real quick. Okay, so I like to take the base of the pretty much one of the major highs. I mean, sorry, the major lows. I'm sorry. Pretty much this one. And then I would like to create a trend here. And I'll show you something that's pretty intriguing. Okay, crap. Let me expand this sucker. Expand right. Okay. Alright. We kind of have this line right here of support. So frankly, I would not open up shorts, significant ones. Excuse me, significant ones until I see a 4-hour candle close outside on the bottom of this line, because it's it's a supply line. Now, if I see a 4-hour candle close bounce off of it and everything like that, and then I see my support and resistance indicators, like basically these dotted lines kind of pop up and stuff like that, then I would actually look for a long opportunity. But frankly, what the chart is giving me is more so an opportunity to use this as either a supply line or an indication of a major pivot to the downside. Because if you were to lose this, we're talking significant dumps to the downside, okay? One, if you sell like basically all of your crypto, uh, up here, you'd probably be saving like 26, 25% of um, your overall capital, frankly. Because now, what's interesting is that this is this is like daily line stuff right here. These lines right here are from daily perspectives. Um, pretty important stuff if you ask me. We did have this like resistance line that was like pretty much significant for, yeah, basically 122 days. It broke out a couple of weeks ago. And since then, we've had this like long-standing upward trend, which as you can see is pretty much right here. Now, if this were to break, there's really nothing else. You do have these pivot zones, but frankly, I'd consider them more so dead cat bounces as opposed to significance. So realistically, you could see this price confirm even lower lows, maybe even lower, until this downward sloping support line is tapped, frankly. Because what's interesting about this particular line of resistance, which hasn't been back tested, has not been back tested as support. We had this like bullish engulfing candle, basically this big candle right here. It broke out and just continued on, and it hasn't back tested it. So that would be my biggest indicator of like, okay, if this supply line, this green line, is broken, I would suspect price to eventually come down here, back test it as some form of support, and then kind of continue on to then kind of reveal other support and resistance areas. But yeah, that's way meta, and that's like way out there. The main form of support before even this green supply line is the EMAs right here at 23,472 and at 23,425 roughly. All right, so I'm going to leave it at that. I think I kind of been babbling on for a little too long. But yeah, basically to close it out, I like this consolidation on the daily. I talked about it yesterday. If you were, listening to me yesterday, you already expected, this consolidation to play out. Now, I don't think it's necessarily done per se, given what the 4-hour data has been giving us. There could be a relief bounce, maybe slightly above, maybe halfway to like this bearish engulfing candle. Usually bearish engulfing candles will, if there is a rally and kind of like a revenge pump, if you will, it'll go to maybe like halfway to the candle, which is at 24.524, but it'll pretty much stop out there. Now, if you see like a 21 9 EMA cross, on a significant time frame like the hourly or like the 4-hour, then yeah, then that pump is real. But so far, the ball is in the bear's court, and I'm just gonna leave it at that. As you can see, price is really floundering to stay above. Really, yeah, we're already seeing the break to the downside. Yeah, it's the wick lows are getting more wicky and more to the lower. Anyway, all right, well, Now I'm just kind of commentating over myself. But anyway, have a great rest of the night. I hope everything turns out well for you this week. Yeah, if you haven't liked this video already, please do so before you head out. Also, yeah, let me know what you guys think in regards to the price action. Do we think we're going to scam pump to the upside? We're going to scam pump to the downside? We're going to consolidate? Yeah, your information is your perspective and your information is greatly appreciated. All right, yeah, take care. Have a great rest of the night. Bye bye.